We're also going to be talking about Cyient this morning. Reema is here to tell us why. Reema, over to you.
Thanks so much for that. So, Cyient's Q1 numbers were not a miss. They were actually a shocker. Very, very disappointing set of numbers. The consolidated revenues for the company have fallen by 10% on a quarter-on-quarter basis. Now, the company classifies its revenues into two brackets, but the main one is digital engineering technology. They call it DET, and that's the metric that the street generally tracks. So their DET revenues fell by 5% on a quarter-on-quarter basis. All the verticals that they operate in, whether it's connectivity, transportation, sustainability, new energy, all the verticals saw a decline on a sequential basis. And after such a dismal start, the company has lowered its full year guidance. Now, the guidance is for the DET business, which is more than 80% of their overall revenues. Earlier, they were anticipating high single-digit revenues. Now they're saying flattish revenue. This is on account of a delay in project ramp-up in telecom. There's continued weakness in rail. So, very weak numbers, a big cut in the company's guidance, and it doesn't end there. Brokerages believe that even achieving this guidance looks to be difficult. In fact, Nuvama put out a note saying that from Q2 to Q3, the company will need to deliver 3% quarter-on-quarter revenue growth every quarter. And that, according to them, is a tall task. So Kotak also agrees. They're saying the lowered revenue guidance is also aggressive. They cut EPS estimates by 14 to 18%, but they still are bullish on the stock because of medium-term opportunity and reasonable valuations. Nuvama titles their note as a shocking quarter, valuations to save the day, but the cheap valuations limit potential downside. They retain their hold rating on the stock, lower the target price, but no taking away from the fact that this is the weakest, earnings from the tech sector this quarter. Back to you.
Oh, I mean, that's, as you said, disappointing, really. 5% lower, by the way, in the stock in the pre-open. Let's look at